Turkey has been performing exceptional in the last 10 years. I think 3 weeks ago I started sending tweets about this panel. They asked me to send some tweets and on the social media. If you look at the tweets that I sent, I think it tells itself. Which country in Europe expects 45 shopping centers only in 2012, this year, 1,000 properties in the next 3 years in the hotel segment, 70,000 plus what we call branded projects only in 2012. So all these segments actually shows that there is something going on in Turkey.
When we look at the rate in Turkey, I'm sure presenter from Pricewaterhouse will explain in more detail. But two important things about rate regulation in Turkey. One is it provides a quite substantial tax benefit, both for the shareholders and the company itself. There is no corporate tax, 100% tax exemption. And dividends are also tax exempt, and there are several other transactional tax benefits. So it's a very tax-friendly environment in Turkey, Turkish regulation. The second important thing about the regulation is, I mean, it's quite investor-friendly as well. With several restrictions, it provides a quite transparent reporting system. And it also, with the application of independent board members, and each independent board members being one of the committee members of Ethic Committee and Disclosure Committee, Corporate Governance Committee, overall it creates quite investor-friendly environment. If you look at, if you compare the office stock of Istanbul with, for example, like Warsaw, which is a city of 2 to 3 million people, Istanbul stock is even lower than Warsaw, let alone other big cities of Europe. The main reason of this is because in Turkey, residential flats, apartment flats, can very easily be converted into office area. And this is the main reason why we have very limited institutional office stock in Istanbul.
In terms of what's happening in the market by the last quarter of 2011 and this first quarter of 2012, the first point that I would like to stress is the decrease in mortgage loans. There has been a drop starting from the third quarter with the interest rate increases. Actually, the major reason of the interest rate increase was the concerns on the European crisis and also the current account deficit of Turkey. And this led to a 300 basis point of increase in government bonds in just a month. So this rate increases has been reflected to the credit market and also the deposits and other interest rates. However, what's interesting is that after a normalization of the interest rates in the last month, this has not been reflected to the credit markets. And this also shows the reluctancy of the finance institutions to lend more in 2012. So one of the biggest challenges would be the financing side of the story, where financial institutions are very reluctant to lend in 2012. Our expectation of credit growth is around 10 to 15% in 2012, which is much less than 2011. The second point is the foreign investment in real estate. The total 2 billion in 2011 includes the foreign investors purchasing real persons and also the foreign direct investments. This $2 billion has been lower than what has happened in 2010 and 9. So although our surveys and all discussions with foreign investors shows that Turkey is a great opportunity, and as explained by the other attendees, that there are significant population and penetration dynamics which supports these, we still have not seen that opportunity turn into investment yet. So This is also some negative points in 2012. I would first agree with the fact that the previous examples sometimes can be very misleading for the investors. Also, the timing of the IPO is very important in terms of the discounts. And another factor would be the transparency. Actually, the valuation standards and the valuators, independent valuators that we are using should be very reliable to give the confidence to the investor. And also, finally, I believe that the story of the Turkish market and the company should be told much better to the investor in the roadshows and etc. Because sometimes we see that very prospective investors have been sold with significant discounts, and I believe that this has something to do with overrated country risk of Turkey and the companies, which should be overcome by better explaining ourselves to the foreign investors actually.
When we come to October 2011, the volume of the stock exchange markets dropped down to $44 trillion after the global crisis of 2008. But at the same period of time, this is a very significant matter, the volume of the underwritten institutional real estate transactions globally reached up to $24 trillion, from 17 to 24 trillion US. And the volume of the listed real estate companies reached from $1.2 trillion up to $2 trillion as of October 2011. And we understood the tendency of the investors during the global crisis convert to change from different type of investment classes to real estate. And it shows how important to have real estate investments to protect your investments and to have a shelter against economic crisis. And that was a very important issue, I guess.